All right, it's recording. All right, so it's going to be our NFP event at 8:30. And the New York model is something that I've seen follow through and be successful during NFP week. If not, most times the setup stop loss is hit, and then it still continues towards the trade idea that we were speculating. So what the New York model is, we're just looking for the market to run one side of the dead zone and revert back to the other side. So on my chart, like I said before we started recording, I don't believe in indicators, but I do use session indicators, right? I'm not using indicators to help me find overbought, oversold, or moving averages, or Bollinger Bands, or whatever the case may be. I don't even know how to use those indicators because I've never been taught how to use them or ever been educated on it. But with the dead zones, they're going to be our primary focus prior to the kill zone. So let's just take a look at this UCAD example here. And this is a phenomenon that we see repeat almost every other day and in every other pair as well. So yesterday was a very good example. I saw someone in the Telegram channel say this. And what we would do is we'll go down to the 15-minute time frame. And we're looking for the most recent swing low and swing high. And we'll mark off any other ones inside there that are still left unmitigated. So this is the swing low right here. So we'll take that. We have another one over here, and we'll take that as well. What we're looking for is the price to run one side of this area. Now, I know it doesn't look like a clear consolidation here, like this one here. The Asian lunch. No, this one, yeah, the London lunch. This one's a clear consolidation. Very objective, right? Sideways and range bound. You see how it runs one side of this 15-minute swing low here? Almost looks like a double bottom, if anything. Let me double check. Nope, this one's lower. So this is the swing low. So it runs that swing. Look how perfectly it runs that swing low. Runs below 2 a.m.'s opening price, brings itself in a oversold condition, discount, and then rallies up. That's what we're going to be looking for here during the New York session. And we want to see if there's any triple confluence or double confluence. And I'll get into that as we lead towards NFP. What times are those indicators put on? Good question. So let's clear that off right away because we got a lot of time. So this is 8 p.m. to midnight. This is midnight to 2 a.m. This is 2 a.m. to 5 a.m. This is 5 a.m. to 7 a.m. I have a video on the channel showing how to set this up. This is 7 a.m. and then to 10. So it looks like this. Give me 1 second, guys. They're my pops. Sorry about that, guys. So I'll show you the session indicators here so you can see it here. So which one is this one? Is that London close? Yeah, it's London close as well. See, every single time period on my chart is pretty much highlighted. There's not a period on my chart that's not highlighted here. I have them all separated because you can't put all the kill zones in one. So just show the input here. This is London close. So it's 10, right? 10 a.m. to 12 p.m. You got the other indicator. This is the Asian session one, right? You got 8 p.m., which is 20 to 0, and then 00 midnight. That's how I got that one set up. And then you got the London 2 a.m. to 5 a.m. I think you got one more. And you got 7 a.m. to 10 a.m. there. And then the dead zones, I believe, is this session indicator I have here. So you got 12 p.m. This is 12 p.m. Again, the larger lunch period to 8 p.m. Scroll down. Let me see what we got. We got midnight to 2 a.m. That's that London lunch there. And then we scroll down again. We got 5 a.m. to 7 a.m. That's the New York lunch. And that's about it. Yeah. So we don't need all these on the chart right now. We just keep these on. Keep it clean for the eyes. Sometimes it's too colorful for me. I need to make it more subtle. So let's take a look at UCAD. and what it did yesterday. So we got 7 to 10. Let's keep it clean charts, clean thought process, right? We don't need too much on the chart. Doesn't have to be super colorful. Got to be able to see what we're doing. We got the opening price. I think it's an up close candle, so it opens here. That alone is going to put you ahead of a lot of retail traders. This line in here, this line right here, I'm not saying it's the end all be all, but this line right here, the opening price, is going to be our premium versus discount. So we know where we should be ideally looking for a sell or a buy if we're speculating either or. Anything above is a premium, anything below is a discount. That's it. Nothing special about that. How we use it in application is a little more difficult because some people might speculate, price action to go higher, and they actually see it drop instead, or they're speculating price action to go lower and they see it rally instead. So it's not going to be perfect. Your analysis is not going to be on point every single day, but if you keep studying this and you keep practicing, you get a feel for it. So let's play it forward and see what happens. So we play it forward, and bang, what happens first? Buy side liquidity is ran. Right? This is that same UCAD idea that someone said in the Telegram chat. I went and checked it, and I was like, yeah, it was crazy. And then London closed continuation just allowed this thing to dump after New York session. So we got the raid after that buy side liquidity pool. Now my eyes go like this instantly. This is what I do, just naturally, right? It's checks and processes. These are all my targets now. All this is my sell side liquidity pool. I want to see price run back down to that. Official order, bring center back. I want to see it run down here as my target. That's an opportunity that we can have. But when it runs that buy side here, I instantly go from 15-minute straight down to the 1 minute. A lot of people will tell you in the community, you can't trade the 1 minute time frame. We've disproved that many times. That's a myth. You can trade the 1 minute time frame. You just need to be a little more experienced. What we're looking for is a fair value gap that runs through a swing low, and that entry point needs to be in a premium. It needs to be above that 7 a.m. price point, the line in the sand right there. That's the line in the sand. We can see there it is. That's our entry technique. It happened very early in this session, 7:25 a.m. It happens right here. Zoom in. It's my favorite entry technique. Some people might say, "Oh, it's a breaker as well mixed into it. There's a volume imbalance. There's a bear or shorter block. There might be those PD arrays in the area as well, for sure. I don't disagree with that, but this is just what I see and the way I go about it. So we see this PD array is physically forming where in a premium above 7 a.m. That is not by coincidence. It can't be. Market is not random. That is not by coincidence. This is where I'm looking to go short. Now, I'm not sure how far price is going to run into this fair value gap or this SIBI. I have no idea. It could run just to the beginning of it. It could run to the consequent encroachment of it, right? The midway point of it. I'm not quite sure. I don't know. Or it could run all the way up to the premium side of it, the top side of it. It can fill the entire thing or go beyond it. But this is the area I would like to get a entry. Sometimes the very first touch is the only entry you get, and there's no other re-entry, and it continues dropping, which is why I believe ICT had made that drill, institutional order flow entry drill. As soon as it touches it, that's where we get in short, or vice versa. That's where we get in long if it was a long setup idea. So as soon as it touches that, that's where I would set up my my parameters. So 15 pip stop loss, 1-to-1 scenario. Some people, I had a friend, someone had asked me, is 15 pips too much? I don't think 15 pips is too much. Oh, you can no. 15 pips is a scalp, if anything. It's very small. It's not a large stop loss. I mean, if you're a day trader, you're looking for anywhere from like 40, 50 pips per day, right? Or every other day. There's only 15 pips. Very small target for us to be looking for. I like that the TP is within range of some type of sell side liquidity pool, or even this one here, pretty close to that. So it's not bad. Not bad. So let's play it out and see what happens. Let's play it forward. Price taps into it. Look how price fills the entire fair value gap. It even has a close outside of the fair value gap. Doesn't mean trade setup is done. Let's play it forward. Got some drawdown. We expect drawdown at times, which is why we got to risk properly. 10 pips is where I like to scale out and hold. And you can see, look at how we take out every single sell side liquidity pool. I'm not telling you it happens every day, but if you study this sequence here, this is a model in itself. There's nothing fancy to it. There's nothing flashy to it. It's very systematic. If we want it to be more objective about it, let's say we're above 7 a.m. Check. That's a premium. Right? Just put an arrow. Let's just put an arrow above it just to show. Okay. Premium. Let's go back to IPDA True Day Open. Let's go back to midnight. Where's midnight at? Midnight Thursday, right? If I can get it. Where's midnight? Here. Started this dead zone. Choice out to 7 a.m. I mean 10 a.m. This is 12 a.m. or midnight opening price. Entries above that as well. It's above. This is Thursday's opening price here. True Day Open. IPDA True Day, right? It's above that. Let's go to Sunday's opening price. Let's go back. I think we're actually below it, if I'm correct. Yeah, we are below it. So this is Sunday's opening price, somewhere around here. I'm not even going to guess where the open is. That's where it is, somewhere around there. So we only got a double confluence of this, not a triple. SOP, acronym, SOP, Sunday's opening price. So instead of getting a triple confluence, we got a double confluence. So we're above 7 a.m. and we're above midnight. That's enough for me to justify a short idea. It could have hit my stop loss. Price could have easily went back up here, knocked us out. It's not the end of the world. Why is it not the end of the world? Because we have proper risk management. Do not get into a trade that you cannot afford. That's the whole point. You can only risk what you can afford. If you're trading and you're getting into this trade idea and you're risking 5% and you're getting nervous as it's going up and creeping up into drawdown, and you have thoughts to yourself like, yo, man, I'm down 100K. I'm down 200K, whatever the number. I'm just shooting out numbers, whatever it is, right? Based on your equity. I'm down $100. I'm down $50, and you're getting anxious and you're getting nervous. Odds are you're probably risking way too much. Because when the market hits my stop loss, I just look at it, shrug my shoulders, and I'm like, the market got me this one. I can't win it. I move on to the next trade. And we try to mitigate those losses by lowering our risk to the next trade idea. We make up those gains, and then we could go back to our standard procedure of risk protocol. So if we were to take a loser on this trade idea, let's say we risk 1% of 10 grand is $100. We lose $100. The next trade we take, we can't take 1% risk. We need to cut that risk in half or by a quarter at least. And until we make it back, then we could risk that standard 1%. That's what you need to do. There's a protocol to how you risk when you take a loss and how you mitigate it. Do not go into this market looking to revenge trade. That's why I said at the beginning of the week, I said, hey, it's NFP week. Things may not go your way. Though we had some good solid setups this week, right? Monday, Tuesday, I took my trades, took my winners, but Wednesday, Thursday, left it alone. And even Friday, I'm not going to be trading it, but we're going to watch it live. But this is the model that I would like to see play out for NFP, whether it's a buy setup or a sell setup, based on where we are, based on Sunday's opening price, 7 a.m.'s opening price, and etc. I'm going to go take a look at that. Does this work on the NASDAQ? Yeah, it does. Now, the times might be a little different, though. The kill zones and the macros might be a little different. So look into that. It definitely does, because all markets are systematically rigged the same way. Doesn't matter the asset class. They're all set up the same way. It's just the timing that's a little different. They're going to run buy side. They're going to run sell side. They're going to make inefficiencies. They're going to have opening gaps. They're going to run in a premium. They're going to run into a discount. They're going to give auto trade entries. You're going to see these same ideas in any asset class. It's just the timing that's a little different. Everything is very fractal and pretty seamless across asset classes. You can see it in metals. You can see it in cryptos. You can see it in stocks. You can see it in FX. You can see it in futures and whatever asset class you trade. Right? You probably even see it in meme coins as well. Market is all coded pretty much the same. It's just the timing of when those volume is injected and when the volume is not injected. So you can see volume is definitely not injected here. There is volume here. Don't get me wrong. There's volume continuously throughout the market 24/7. But is the volume as high as New York and London in Asian session? No. Look at this. Sideways. Again, very lethargic price action. I've shown this many times. I will always keep showing it to the day I retire or stop trading. But there are certain times in the market you just don't want to trade. And as you can see, all the gray areas on the chart that are highlighted pretty much are consolidation. Don't get me wrong. There are times where the kill zones themselves, Asian, London, and New York, and even London kill zone. I don't trade London kill zone. I don't trade London too often. But there are times where the kill zones themselves do consolidate. That's not something that is up for debate. We do see sometimes Asian session consolidates. London session does consolidate. New York session does consolidate. London close session does consolidate. But most times, those kill zones are where you want to primarily focus all your time for trading. You don't want to be trading dead zones. And then once in a while, you do have a dead zone that's very lengthy. Right here. Lengthy. But then most times, as we keep going, it doesn't stop. This is not something I just discovered or it's brand new to the trading community. There's periods of time where the market is just not popping. It's boring. Market's just lethargic. It's moving sideways. Tight consolidation. Well, we want that consolidation. Why? Because the market goes from a small range. That's where all the retail traders are not interested in the marketplace. Market's in a small range, and it goes into a large range. Apologize if it went mute again. I'm just screaming, screaming to my little brother. So the market goes from a small range to a large range. And when the market's in a small range, that's when people get disinterested from the marketplace. They don't want to pay attention to that class or, pair that they're trading. They like to look at something else that's already moving largely in pips already. That's when you already missed the boat. You missed the boat. You missed the party. And you're going to be looking and stalking the setups when the market starts to go small. Wait for that range to be broken on one side and see if that range can revert back to the other side. Or you might be a breakout trader. You want to see that range broken and continued in that direction as well. That does happen as well. Let's take a look at the London session here, because the same thing that I'm talking about is what's happening in most kill zones and even Asian session. So this Thursday London session, I didn't trade it myself and I didn't go back to see it, but let's just go back to see how that played out. I'm going to show you guys here too. That New York model, man, that was a crazy setup. Right into the news, and this thing continues to drop. We were only looking for 15 pips, right? Hypothetically. And this thing just kept dropping and dropping and dropping. That's all. We were only looking for 15 pips. Take a look at the London session. I don't have to mark out the whole thing, but I do know this was a 15-minute swing low. I already know this was a 15-minute swing low here. For those that don't believe me, go do your due diligence. That's that 15-minute swing low. This is 2 a.m.'s opening price here. And we're looking for that same entry idea to form below 2 a.m.'s opening price. Let's see. It's right here. Or does it happen earlier? Let me double check. Nope. See, this is not the entry. We'll go back and say why this is not the entry either. That's not the entry. That's not the one I'm looking for. This is not the entry either. I'm just double checking my work here. That's not the entry as well. This is the entry. The swing point, we'll make it red. The swing point is inside the fair value gap. That's the one I want. Like that, right there. So we would go long again. We would go long here. 15 pips. for 15 pips, 1-to-1 scenario, something very small. We ain't looking for anything major. If we do get lucky and we get a trailing stop and we could get more and squeeze out the market, then cool. So be it. We can squeeze more out the market. But I'm very small in my objective. I'm not looking for huge runs per day. I'm looking for 15 to anywhere 30 pips a day. That's really what I'm looking for. I'm not looking for anything extravagant. I'm looking for something very small that I can, be happy about. I got my win. I get to go home and call it a day. But that's that setup there. So let's go back. Look at that. 2 a.m., right? That's the dead zone. Consolidation. You should not be trading anywhere from midnight to 2 a.m. Leave it alone. Don't touch it. It is not worth your while. Let's go to the 15-minute chart just to show you guys that I'm not spewing nonsense. Right there. Look at that. Runs down. 2 a.m. opens. Instantly runs down. Runs down. I'm making all these sound effects. I'm so funny. Runs out this swing low, right? Raids that swing low. Is it emojis? It is emojis. There. Runs out that sell side. What do we have available to us now? We have buy side up here. That's the only buy side we have for the dead zone. So this would be our target now. Here. Where does this setup form? This buy setup, at least for London session, it forms below Sunday's opening price. We're already below the weekly opening price. That's one. Check. Where else does this setup form? It forms below 2 a.m.'s opening price. Check. It doesn't form below midnight's opening price. So there's a little conflict there, but it's still 2 out of 3. If we're doing a 3 out of 3, right? A triple confluence idea, it's 2 out of 3. I personally don't use the ICT dead zone setups or those macros. That's just my personal take on it. If you want to go along with ICT and those dead zone setups, so be it. I personally don't find it worth my while personally. That's just my take on it. And the reason I don't find it no problem. I don't find it interesting or worth my while is because it's time consuming. There's so many other kill zones I could trade. You pick a model, you stick to it. This is my model, and I'm only disclosing it to you guys this way because this is what I do. This is how I make my profit, or this is how I like to go about trading. This is my personal take. You may want to cater the model a little differently or switch it up a little differently. Like you might be listening to me like, oh, I like the idea, Deontay, but you know what? Instead of using the 15-minute time frame, I'd rather use the 5-minute and then scale down to the 2-minute. You might change it up a little bit. Or like you said, ICT has a dead zone setup. You may want to use the dead zone setup preferably over the kill zone. So price comes down, runs out that sell side, hits into that fair value gap, right? Sell side raid. It creates that setup. Some people might say, but what about all these other entries potentially? Why couldn't you catch this? Or why not this fair value gap? Or this one here, or that one there? Or why not this bullish order block here? Right? These series of down candles here. Right? These series of down candles. Why not this bullish order block? It's just not something I was looking at. That's really it. There's so many other ways to get into the market. Everybody has their own, style and swag to get in. And this is mine. This is the one I prefer. This is the one my eyes, right, recognize over and over and over. When I was studying back in the dorm, when I was in college, this is the one that always stood out to me. And I was like, there's something about this here. I was like, I need to study it more. And then I realized, like, oh, this is a nice entry technique. It does provide a valid setup sometimes. And 15 pips done, right? And then so on if I'm able to get more. But that's what we're really looking for the NFP setup. We could take a look at any other pair. It's the same thing. It doesn't change. For instance, let's look at that UJ setup the other night. Tuesday, right? Again, Tuesday for the Asian session model. And why do I talk about Asian so heavily? It's just because I'm more available around that time. It just works out better for I think I have it on the chart already. Where do I? Is it hidden somewhere? Where's Tuesday? Tuesday, I guess it's not on the chart. I thought it was. I guess I cleared it. Okay, let's clear this off. That Tuesday, Asian session was very successful. It's pretty much running on for like over 100 pips. Could you explain the funded account challenge? I would like to explain the lot size. I'm trying to Use Trade Locker. What are your thoughts? I'm assuming you meant what are your thoughts? Risk 1%. Risk 1% or anything smaller than 1%, 0.5%, and slowly compound and work your way up. Like there's no perfect way of passing a funded challenge. Like I know there's a lot of people out there on the YouTube channels that say, "Oh, this is the best way to pass a funded challenge, and this is the smoothest way to do it." You got to have a buffer. You got to win your first 2 trades, and then you risk 3. Then you do this, and then honestly, in my opinion, trade the market with your model. Have great risk management and risk protocol. Mitigate those losers. Cut the risk when you have to. Cut the losers sooner than later. Like these are just small advices or tips that I can give you. Cut the losers as soon as possible, right? If you feel like this setup is gonna fail, close it. Like don't sit there causing yourself more psychological distress. Just close the trade. You're stressed out. You think that it's gonna hit your stop loss. Instead of watching the trade hit your stop loss, get out the trade early. Another advice: risk small. You don't have to pass the funded challenge in 1 trade, 2 trades. Like it does happen. Like it's happened for me before. I know it's happened for a few others probably in the chat. Some of you guys can relate to this. You do pass funded challenges in 1 trade setup sometimes. I wouldn't ideally recommend that because you're probably being very aggressive in your risk and you're probably trying to get that funded account as soon as possible. Everybody wants to make money as soon as possible, but sometimes that could be detrimental. So take it slow and easy. Whether you risk 1%, you risk 2%. But if you take a loser, you mitigate the losses, you cut the risk. You can't risk 2%, take a loss, and then risk another 2%. And then let's say you take another loss. Now you're down 4%. I have people message me and say, yo, I'm down, 4%, 5% on my funded, on my challenge account. And I'm just like, well, how'd you get there in the first place? Did you not mitigate the losers before risking that same 2%? They say no, or it's something else, greed, cycle of revenge trading. Everybody goes through it at some point, even the professionals. You will get flustered. Stick to that model. Believe in your model. If you don't have a sound model, don't trade. If you don't got a model, leave it alone. Do not trade. Nobody should be trading anything if they don't have at least 6 months to a year of experience, right? And the reason I say that is because if you don't have that experience, you don't understand the way the market changes month to month. You just don't. Each month is not the same. You're gonna go. I mean, characteristically, they are similar, but each month is not the same. You're gonna get different. You're gonna get different trends. One month might stall on you. Another month might just be very range expansive, right? It just trades and runs in one direction, and it feels like the easiest month ever to trade. But then the next month is very lethargic and it's sideways. So get a little more skin in the game before you start jumping into the markets. Not everybody is going to be very successful right away. It took me about 4 years to be profitable. Pretty much my whole college career. It took me a very long time. It takes others a very short period of time. Some people get into the market and start trading and they're successful right away off the bat. It just clicks for them. Everyone has a different learning curve. So just take your time, digest the material, and find a model that works. Find something that works with your life schedule. That's one thing. When I was in college, my life schedule was all over. I had class. I had to go work out. I was talking to girls. I was doing all these other things, So I was trading at any point at a time. Do seasonal tendencies still repeat themselves? Yes, they do. Seasonal tendencies do repeat themselves. That is a fact. Someone said that in the chat. Seasonal tendencies are a real thing. They do repeat themselves. Are they always going to be the same every year, year after year? No, they're not. They might change slightly, but they're not going to be the same year after year. They might be a little different. So let's continue with the Asian session model. Buy side, sell side, sell side, sell side. I can't take this as sell side. Why can't I take this as sell side? Because it's already been rated. I can't take it. There's no sell side liquidity pool there. It's done. I can't take this sell side here. It's already been rated. I can't take this buy side here, the swing high, because it's already rated. Can't take this buy side. It's already been rated. I'm looking for all the swing points that are still open or any of the highest double tops or lowest double bottoms that we have. That's what I'm looking for. So let's say, I don't even, is this a swing high? Let me see. It is a swing high. So this is a swing high. But let's say these were a double top. I would take this because it's still buy side. Even if it's not a swing high and it's a double top and it's equal highs, I would use that as buy side liquidity pool. We got the opening price. This is Asian Open. Look how fractal this stuff is. Not saying it's going to happen every day, but when you go in, you get that data, you start to see day of the week. When is this model more successful? Is it Monday night? Is it Tuesday night? Is it Wednesday night? Or is it Thursday night? There's no Asian session on Friday. I live in New York. There's no Asian session on Friday. But out of all those days, when I start tracking the data, I realize that Tuesday and Thursday tend to be more of those phenomenons where it's successful and it gives me more bang for buck. It runs on more and it continues the trend of the month or the trend for the week. So this Tuesday setup that I'm telling you is one of those ideas. Let's play it forward. Let's see what happens. Play it forward. Boom. Right? There goes my sound effects again. Price runs out what? Buy side. Now, instantly, what my mind does, target. We're looking for this. We're looking for any of these to get targeted. Of course, this is our first target. This is our primary target. We want to see this one rated first. Why is this changed again? Send to back. That's strange. What am I doing? Oh, I'm doing the wrong one. There we go. I don't like when my stickers or emojis are covered. I want to see it. So, buy side is ran. My mind goes, okay, we have a potential sell setup idea. Or if I'm wrong, it's a continuation. That's what's going to happen. It could be this. And it just continues going up. It's normally three things. It's going to break out, it's going to consolidate, or it's going to give a reversal. It can't be a fourth thing because we know the market is only going to give us those three. It's going to consolidate, it's going to break out, retest, or it's going to change trend. And that's really what we're looking for. So once you figure that out, you're like, okay, the market can't really give me something that I'm not unfamiliar with. Let's go down to the 1 minute time frame because we rated that buy side. Now we're looking for a 1 minute entry. It has to be a swing low that is ran through with a fair value gap. And I missed this one. I was on my way home from work. I was like, dang it, man, I missed this one. But it is what it is. You can't get them all. It's right there. I just showed the same entry for London and New York. You can't tell me you guys can't see this one. You can't. You just can't. I can't unsee it. Once you see it, you can't unsee this. I know there might be other PD arrays in the area. I know, guys, we all look at the market a little differently. Deontay, I like that entry, but I saw this bearish order block instead. Cool. Or I like that entry, but I saw this rejection block instead. Cool. So be it. But I saw this instead, okay? There's that entry. Again, we would go short on the very first touch or the discount side of that fair value gap 1-to-1. We ain't looking for nothing too special. If we get more than that, so be it. Cool. Thank you, market. And that's what we're looking for. Where does the entry form? Above Asian Open. 8 p.m.'s opening price. I know there's some folks that start the Asian session at 7 a.m. 7 p.m. I don't start mine at 7 p.m. I always start mine at 8 p.m. Always. Play it forward. It respects that. It really respects that PDA rate really good. Respects it strongly. And just look at that. Amazing. And again, see how the market retraces? Those trailing stops. As soon as you get, let's say you hit 15 pips, right? And you don't have a TP here put in, right? Or a stop loss to get you out the market for the profit. Let's say you have it open and then you start trailing your stop. You see how the market pulled back? Sometimes it's hard to have a trailing stop. I don't want you to feel like it's just you. Oh, anytime I'm trying to get runners, it's hard. It's me too. It's a tough thing to fight, honestly. What I recommend, what I've noticed, having a hard stop loss or a final stop, right? That's what I mean by that. Like keeping a stop loss, like as soon as you put this in, you don't move this stop loss. Oftentimes, that's your best bet to get more out of the market. You hold longer and you keep your original stop loss. You don't move that. And now we're going into what? Wednesday morning, midnight opening price. And we hold. This is Tuesday going into Wednesday true day. Gets down to that sell side, just taps it. Just taps it. Speed it up. Let's go on the 5-minute chart. Even gaps down a little bit. Going into New York session now. London drop, New York session. Tapped all the sell side. Done. We went from one side of this dead zone to the other side of the dead zone. I don't know what more and how much more simpler can it be. Now, I know there's a lot more other models out there, but this one is very simple to me. To the point where you could probably teach a child this. You teach a kid this. It's very systematic. It's a 1-2 punch. It was 1-2-3 punch. Right? Step 1, label out the buy side and sell side. Step 2, wait for one side to be rated. Step 3, look for the entry. That's it. 3-step program. That's really what you're looking for. Yeah. That was a great trade setup. And it continued trading down too. Like, look at where it's at now. It's over 100 pips. That one idea. I'm trying to tell you, the power of these setups are honestly astonishing. Look at that. There's over 100 pips. Entry's probably what? Entry's what? 150.12. Let me go there. 150, 112. It's close I can get to it. Okay. It's over 300 plus pips. Like, that's insane. Sometimes when I see this, I'm like, wow, 300 plus pips. But again, I could have only gotten that if I kept the original stop loss. And it was a Tuesday, right? Snapshot that, screenshot that. Go back and look at it yourself. Don't just take my word for it. Deontay's just showing us, he's cherry picking. He's only picking setup. I show you guys setups that fail. I'm not afraid to show losses. I'm not afraid to say, yo, I'm down 2% for the week. I can't trade for the rest of the week. I'm done. I'm out the market this week. I'm done. I took 2% risk. I can't take any more. I'm going to blow my funded account. I'm going to blow my challenge account, right? I'm going to be going backwards in my live account instead of compounding forward. I got to chill. I can't trade anymore. I'm done. You got to be able to know when to throw in the towel. People get too upset. And I know it's tough sometimes. People trying to make money. The world is getting more expensive every year, every month. It's getting more expensive. Hey, I didn't make the system. That's what it is. Let's take a look at what's going on currently right now as we're heading into 8 o'clock. So what's a couple pairs you want me guys to track as you go into NFP? Just let me think. Give me 3. We'll keep it 3. First come, first serve, right? NAS, we're not doing NAS. I'm sorry, we're not doing NAS. We're doing FX. Give me a foreign exchange currency. UCAD, AU. Okay, we got 3. Boom. We got all 3. Done. It's locked in. And the inversely correlated. All right, got it. We got UCAD, AU, UJ. Perfect. And we're tracking AU for the month. So let's go straight to AU first. Let's see what we got going on. See, I even have this set up here for myself for the week. Got Sunday's opening price, right? So I know where we are. And look at where the market is buying. Buying below, cheap, go weekly open. Drop below the weekly open, rallied. So Tuesday's the low of the week, and it rallied up. And there's just possible sell setups up here. What is this? This is New York. No, this is London close. There's a London close reversal around 10 a.m. to 12 p.m. Reversal was happening here. So already we're in a premium for the week. Let's keep that in mind. We got the New York session starting off here. We got the open. And we'll do this for all the pairs that we just mentioned. 7 a.m. And I'm not looking to call anything. I would speculate for sure, but I'm not going to sit here and say, oh, this is guaranteed, because I don't want anybody to say, yo, Deontay, I took your advice and I followed the trade idea. I risked 5% and I blew my account. I don't want to be the one that you blame, please. Disclaimer, disclaimer, disclaimer. So we already ran sell side. Interesting. We already ran sell side. From here, here, here. And down here. All right. So far, this is what we got. Let's just take a look at the 1 minute time frame. Let's see if any of those entry techniques that we talked about has formed yet. Not yet. Nothing yet. All right. Nothing. I'm going to watch this. I'm going to send an alert here. Do I have another tab open? Yes. Let's close this tab down. Because when you have alerts and you have multiple tabs up, like all the tabs start spamming the alert. All right. I'm going to send an alert here because I just want to watch this swing high. Maybe this swing high is the one that the fair value gap runs through. Who knows? We'll see. So watch that. We'll be back. So let's go to UCAD. Okay, got some news. 15-minute chart. Clear this off the chart. Oh, and we got CAD news too. What do we got? What is this? Unemployment rate. Ah, we got job numbers. Okay. It's going to be very volatile for UCAD for sure. Oh, we ran buy side. We're above 7 a.m. I like that. And we're above midnight opening price too. Let's go 7 here. Let's leave it as put the time. Sometimes the acronym throws people off. Like MOP, what is that? Midnight opening price. That's 7 a.m. We got sell side here. And all we're how do we find the sell side? How do we find the buy side? We're looking for those double bottoms, double tops that haven't been mitigated or liquidated. That's sell side. This is sell side too. It lands inside the dead zone. Even though this is 7 a.m., it still lands inside the dead zone. This is sell side. I'm counting it. And this is the lowest low. So this is not a swing low, but it's the lowest low of the dead zone. So I'm going to use it as well. This is incorrect. Let me go 7 a.m. Oops. And we ran that buy side here. Put one for both of those there, and then one all the way down there. So far, we're in a double confluence premium. I don't think we're above Sunday's opening price. No, we're not. We are below it. So it's only double so far. If it's going to give us a sell setup, it's only double. Anyway, we got chairman. Yep, chairman's going to talk after. Hopefully, I should be able to watch this. Yeah, I want to listen to that. Sometimes it's very informative. Sometimes it's very redundant. All the meetings are the same. Nothing really changes. Are we hawkish? Are we dovish? How's inflation going? Is it sticky? Is inflation coming down? Did we get a 2% target? It's all the same. It's been the same for the last 3 years. It's not that exciting to watch, to be honest. But it's something to pass time. Let's say U.S. dollar falls early Friday before February non-farm payroll employment report, Powell. Canadian dollar has limited room to rise after tariff delays. See, the tariffs are definitely impacting the market, and the tariffs are not going to be good on the consumers. The tariffs are going to be something the consumers pay for. Sadly to say, prices will be going up. So, market talk roundup, latest on U.S. politics. Whatever. Let's go on the 1 minute time frame. See if we got any of those entries that formed yet. We do not. Nothing yet. Sometimes it will form prior to NFP. Sometimes it will form after the news event. So it's 8:02. We got some time here to be honest to kill, but we'll keep watching and tracking it. Nothing yet. Let's just mark off this swing low. because it's the one that's open. We'll actually mark off this one. If this one closes, because it might pull back down and not make it a swing low. Let's put a time. We'll put an alert there just to alert ourselves. Keep us on our toes. It's just lure. And honestly, like when I'm looking at this, and this is prior to NFP, it almost looks like they're just luring traders to the wrong side, in my opinion. Like they're already off the gate. Like they drop down real quick, drop down below 7 a.m. real quick, and then they start rallying up. It almost looks like they're already luring all the sheep into the slaughterhouse. Come on in. Right? We got food over here. Come on in. Chase the price action. The market's going to continue going up. Would you trade 7 a.m. kill zone prior to NFP? No. I would never trade prior because there's going to be a false move. There's always going to be a fake move before NFP. Always. I mean, you could trade London, but I wouldn't recommend it. If we got this major news event, I would just wait for the news event to trade. I would trade where all the volume is going to come in. This is where everybody's going to be trading. 8:30. 8:30 is where everybody should be trading. That London session, not necessarily, no. I wouldn't. I'd have seen, like when I go back and study it though, I have seen London give a good setup prior to NFP. I have seen it. Would I recommend it? No. Could you go in there and possibly find a setup? Yes. There's always potential. There's always potential of setups. There's always setups that we're not going to catch. There's hundreds of setups, hundreds and different combinations of PD arrays that are stacked together, etc., etc. Well, right here, they almost look like again, I just looks like they're just pushing people to the upside here. All right, and what was the other one? UJ? I'm gonna add a bonus. We're gonna do gold because I'm interested to see what gold's gonna do because why not? I'm interested to see what gold's gonna do. To be honest, I thought gold was gonna hit 3K, but it got close. Gold was going up, 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 and then all of a sudden it turned around. But I think the long-term objective for gold is always up. Like that's my opinion. Like gold is always going to be more valuable. People are always going to keep buying gold because of the way we are as creatures, right? There's always going to be conflict. There's always going to be war. And sad to say, right? There's always going to be conflict. Whether it's I'm not political, right? I'm not the biggest guy. Keep it FX rated only, right? Whether it's religion based, race based, cultural based, country based, whatever it is, politic based, there's always going to be conflict amongst us as human beings. That's just how it is. Oh, we got an alert. UCAD. We'll go check UCAD in a second. That means it ran that swing low. I'm going to see if it ran that swing low with a fair value gap. So it's probably going to take it's going to take what? 3 minutes for it to make that fair value gap. So we got a little time. This is the high. Yeah, this is the highest high. So it ran that already. Buy side's already been ran here. What I was saying about gold long-term objective is always going to go higher. There's always going to be conflict. There's always going to be a need for people to beat inflation, right? Beat the cost of living going up, beat the cost of education going up, beat the cost of raising a family, etc., housing market, etc. People are always going to find ways to try to make more money. That's what the rich do. They don't have liabilities, they have assets because they know the way this world works, it's only going to get more expensive the older you get. The longer the system goes, the more you're going to be paying to live and breathe and drink water. That's just how it works. Sucks, but hey, that's capitalism for you. And until someone can make a new system that we all can get along together and everybody can win, then this is, I guess, the system we live in. Hey, is this a swing low? It did. It ran a swing low. I don't like when it runs one side and it runs the other side already. I don't like that per se, but we'll continue to study it. It already ran sell side after running out buy side. I don't like that. Swing low. Okay, I'll take a look at it. So UJ already made a setup. Is that what you're saying? Okay. We will see. Looks like it's selling already. Looks like it's getting ahead of UCAD. Let's look. Wait, do we have him? Yes, we do. It just tapped into it not too long ago, 3 minutes ago too. Right here. Let me double check. Make sure that's correct. Let me double check. Yes, that's the entry. Okay. So we already got an entry. We already got the New York model forming before NFP. We see that. We all can see that right here. That's when it's tapped into. It's already gone. 1 to 1. Call that a done deal. All right, done deal. We'll see if we can get back down. Maybe we'll get down here. I don't know. We're already crossing the line to 7 a.m. Let's go into. I'm going to put another alert here. Let me touch this line again. I want to see if it's going to get back down to that sell side, that old sell side again. Looks like it is already. Premium, look how they pull everybody up. They start consolidating the market here, breaks it down, and that looks like it's about to break down. Let's go back to UCAD now. We'll get to gold. I don't have to mark it up, but we'll get to gold. Look at that. Look at that. Isn't that crazy? Isn't that crazy? We're just talking about it, and they did it. Look at that. UCAD just made the entry. We'll see if UCAD taps back into this. Short idea. Now, I'm not saying you got to take the trade idea today, but if you were to, right, if you're gonna be a little hard-headed today and not listen to me, if you're gonna take the trade idea, risk very small, micro lots, okay, micro lots. You're not going here talking about, oh, I'm gonna use 5 lots, I'm gonna go in here use 20 lots, and then all of a sudden you lose 20 grand. It's not on me. All right, now we're gonna set the alert on that line instead. Right, entry is gonna be tagged. So let's say it's trading down. It's like 829 and 830 comes out. You might see this. You might see price comes down and then spike, boom, right down. That's what I've seen on the YouTube channel. We have I only did like 2 series, I think, or 2 episodes on it. The first one was live on Zoom, and you guys heard how ecstatic I was. I was yelling. I was going crazy. I was like, they tell you can't trade NFP, but you can. You know, there are models that can get you into NFP. So you can go back on the YouTube channel, take a look at that, and you'll see. Maybe we'll get the same thing. Maybe this is gonna be part 2, and we get to see the same thing happen today. So, or it taps into the entry prior to 8:30, and it might pull us up into a little bit drawdown, and 8:30 comes in, quick repricing, shot. Like there's no way when 8:30 drops. Are you always? Yes, I'm always on the 1 minute. Always on the 1 minute. I love the 1 minute chart. Love reading the 1 minute chart. Sometimes I jump down to the 5, but I'm always on the 1 minute because I'm looking for that very refined PDA on the 1 minute chart. Everything on the channel, you'll see me go from 15 to 1, 15 to 1, 1 to 15. And then if anything else, I'm on the daily chart looking for those swing trade setups. That's really it. The only kill zones, the only time frames that I touch daily, 15, 1. Once in a while, I'll hit the 5. And that's it. Once in a while, I hit the 4 hour. And that's really what I do. Let's go to gold real quick. We got some time. Gold. See what gold is doing. So if UJ is giving that sell setup already, is gold going to rally for NFP? Let's see. Who knows? Right? Because we know these markets have correlation, and they are inversely correlated. Gold ran sell side already? Interesting. Very interesting. It ran sell side already. We don't have to do the full mark out, but it already ran sell side. This is 7 a.m. here. Did it give a sell setup? We'll see. Too clean. Too clean, honestly. Yeah, way too clean. Gold is probably gonna rally. Too clean. Too clean up here, man. All that buy side up there. Too clean. These are, even though this ran out this high, still relatively equal highs. This is too clean. It's almost like a ceiling or a roof right here, right now. Right? Retail would say what? This is resistance. Right? This is the resistance zone. It's too clean. So I want to see maybe NFP does shoot us up, and then maybe we do get to 3K next week for gold. Gold continues its bullish trend because so far it looked like it was switching back bearish, but then dollar started dumping, and I was like, that's not right. So that means gold is probably going to make a comeback again and turn back around and be bullish again. Got the sell side down here. Pretty much almost went right back from buy side to sell side. Almost completed running both sides of the market already. Unless we fail to run this low and we continue going higher, or NFP runs this low, spikes us down into the low, and then shoots us back up. Right? It's like a double fake out. You'll see that sometimes. That's not my favorite. I hate that, to be honest, when you get that double raid and then it goes towards the first break. When you get that double raid sometimes on both sides, this is mainly for London. When I was studying London back in the day, I would see this. London session would raid one side. No, London would run one side of the Asian session high, then run the other side of the Asian session low, and then it would turn around for the day and go back towards the first original break. So let's pretend this was Asian session. Pretend this is Asian session, and we're going into London, right? So let's say before London, like 1 a.m., price is coming up, runs out the Asian session high. The London starts, and it runs back down to the Asian session low. And then throughout the rest of the day, or the other half of London session, right, like 3 a.m. to 5 a.m., you start to see it trickle back up. And in New York session, then it trickles back up towards the first break. I see that sometimes. I call it like a double Judas swing or a double fake out. Some people have different terminologies for it, whatever it is, but not my favorite thing to trade. I normally hate it. But when I studied it, I noticed that the first break was the first move, the real move that the market really wanted to do for the day. Let's go down to the 1 minute chart. Take a look at gold. Look at that. Look at that. Look at that, guys. Could you believe it? Yes, you can. Just taps it. Just slightly touches it. Right? Hits that entry. This is gold. So I got to do... So that's what we have right now for gold. And look, it's just about to hit sell side. Look, it's picture perfect almost. We're watching live. Like, you can't tell me I cherry picked this because I didn't. And now it just hit the target. Boom, hit the sell side. Like, you can't make this stuff up, guys. It happens every other week, every other day, every other pair happens so often. Consolidation gets super boring, Everybody's like, oh, gold's not going anywhere, right? Because everybody jumped into the market chasing price, and then all of a sudden it starts stalling on them. And they're like, yo, what happened to the market? I have no idea what happened. I thought gold was the pair of the day or the pair of the week. And all of a sudden it starts moving lethargically. Happens. And then it runs up, runs one side of the zone, creates some little small inefficiency, stalls for a little bit, and it creeps it in. Boom. Down. Oh my gosh. That was a beautiful trade idea for New York model. And this happened for gold. This happened for the metals, right? This probably is happening on the futures too for gold as well. The futures for gold looks probably very similar. Do I have it on the chart? There you go. Gold futures right here. A little different skewed because this is gold futures. This is not gold versus the dollar, but very similar as well. Look right here. Right, we got a volume imbalance here. A different PDA raise. Very similar though. Price hits in the volume imbalance, trades down. There's a swing low inside that volume imbalance. Right, if I had to change it up a little bit, change the style of it, there's a swing low inside the volume imbalance. Price tags it. There you go. Very interesting stuff to see. What time is it? 8:17. So we got a little more time to burn. But now we hit sell side. Let's see if it holds up. I don't know if it's going to spike down. If it's going to spike down and continue this trend for NFP. Or now that we ran out the sell side and it's a double fake out, maybe it goes up. So we'll see how that goes. We'll get rid of this off the chart because we're not really too concerned about that. Let's go back to UCAD. I didn't hear the alert go off, so we didn't get the entry yet. Really just don't need it to be that far. Probably going to touch it by 8:30. Almost could bet. I don't care what the news does either. That's another thing. Right? As we have time, we got a couple more minutes. I don't care what the data says. In my methodology, in my ideology of trading, the news is the excuse to move price action fast, right? With volume, with speed. That's all the news is here to do, to inject volume. I don't care about the data, about what's happening. The only news event that I really care about the data, not when it hits, not when it's exactly going off. Hey, you? Okay. Just stop me mid-sentence. Look at AU. Look. AU. Boom. Oh, it happened earlier. Sorry. It was actually here. Look at that. It already did it. Already made the entry prior to NFP. Zoom in. We don't need this one. This, I'm just double checking to make sure there wasn't one earlier. There's not. There it is. Swing high, fair value gap, entry, stall. Like, we're waiting to see if it's going to complete this setup based on what we have. I'm not saying it's going to. Here, I would like it to because I'm bullish on anything against the dollar right now. And we will see how that plays out. But like I was saying before, the news is an excuse. That's how I read it. It's the excuse to move price action very fast and get traders on the wrong side of the market. It's not always going to be perfect in the way we would want it to be, but it is something I like to see play out in the marketplace. Let's see how it retests this level. Just watching it, just trying to study price action. Sometimes you don't got to say too much. Just watch the market, right? Just watch the market, see how it plays out. Sometimes it's so fast. Like, sometimes it's so fast. It doesn't even give you a chance to get in, right? The news event drops. You just don't even get a chance to get in. And it causes issues too, depending on the broker and the server and the server, right? Stop losses don't get hit or triggered, or the platform. You know, Trade Locker is notorious for this, man. I like Trade Locker as a platform. Like, I like the layout. Um, I like the prop firms and the brokers that Trade Locker uses. But when it comes to like the maintenance and the way orders are executed around these news events, it could get finicky. And stop losses don't get triggered. TPs don't get triggered. Orders don't go in. You can't close orders. So sometimes it's better not to trade some of these news events depending on the platform. And if you are going to trade NFP in the next 9 minutes, small lot size, guys. Don't risk more than you can. Tight stop loss, if anything, right? I know we have a 15 pip stop loss, but probably make it tighter than normal, right? Keep it tight. Don't do something that you would normally not use. Keep it tight and, hold steady. Hold steady. But I was saying before, though, the news is the excuse to move price action very fast. I don't care what the numbers are saying. Numbers drop, it's too late. It's not like you're going to see, oh my gosh, how many jobs were added or how many people are unemployed. And then at the split second, you're going to take a trade based on that data. No, it doesn't work that way. And I think a lot of people do twin trade, I think it's called. I don't even know what the model is or the idea is. You buy and sell before the news event. You have a stop loss a certain way, and then you close the like. I honestly think that's not even worth your while either, because one trade idea is going to be in drawdown, while the other one's going to be in profit. You're almost just breaking even, if anything. And then what, you close one trade idea, that's the losing idea and the way the market's going in, and then you close to try to make a small profit. Like, it's not, I don't think it's a model that anybody should have in their portfolio. It's just not worth your time. Like, they would buy and sell. Like, they would put a buy order and a sell order, stop loss here, SL here. SL here. They're trading both sides. They're buying and selling, and then it triggers one side. No, I just don't think that's the way. My personal opinion, right? That's my opinion. In my opinion, that's not the way. You might agree to that. You might say, I actually like that idea. Okay, cool. So be it. Man, UJ just is really they're really holding UJ in this area right here with this PD area right now, with that fair value gap, at least the one that we marked off, really holding it right there in that zone. Wow. Market's gonna fly, bro. Market's gonna fly. And sometimes even if the trade idea is not successful based on like TP and stop loss, like it might go boom and then shoot down. Because it is NFP. The spread is gonna open so large. It might run up here. Spread opens, knocks us out that trade. Can't do nothing about that. Nothing you can do about that. UCAD still didn't hit. UCAD still didn't trigger the order. No SD CAD. Unless we're going down like that. But I kind of doubt it. I think we're going to boom, boom. This is my personal thought. Gold. Man, gold's still going. Look at that. Wow. This was beautiful. Great price action. Great structure here. We got 5 more minutes to NFP. Let's take $1 real quick. Same thing can be applied to dollar too. Let's take a look at dollar real quick as well. Right, dollar. It ran buy side. You can see that clearly. It's above 7. It was above, or it's trading around 7 a.m. Just like UJ. Right, that's 7 a.m. Do we get a fair value gap that runs through a swing low? Yeah, we do. Looks just like UCAD. Looks just like UJ. Looks just like gold. Very interesting. The last couple years, gold and dollar have been moving in the same direction. Little thing I want to throw in there: milkshake theory by Brent Johnson. The theory was coined. His theory was coined by another fellow. I don't know the guy's name. But the guy Brent Johnson came up with this milkshake theory, saying that dollar, gold, and stocks will rally in the same direction based on what's happening in the world, based on hyperinflation, based on interest rates, based on geopolitical tensions, based on war, based on bond yields. A lot of those factors that he talked about, they would all rally in the same direction. UJ. So I like alerts. Wakes you up. We're back down there again. Time is it? Got a couple more minutes. Almost there. Almost there. Bear with me, guys. Bear with me. If you're still here, appreciate you guys coming out. Appreciate all the support. I know I haven't been posting a lot on YouTube. I don't know why. TradingView was acting so silly. Like when I was trying to post content from TradingView onto YouTube, when I have it unlisted, so I can go into YouTube Studio and like edit, put a captions and click links and stuff like that and all the other stuff, it wouldn't allow the video to process. So when you record on TradingView, they allow you to take that recording off of TradingView and upload it onto your YouTube channel, right? I like how they have that seamlessly. But when I have it unlisted, when I want it to be uploaded to YouTube, you guys don't even need to worry about that. That's not your problem. It's my problem. But when I had it set publicly, when I have it set upload to YouTube publicly from TradingView, it uploaded it with no problem. And I went to YouTube and checked. I just checked yesterday, and I was like, oh, it uploaded my video, but it didn't upload the other videos. It was so strange. Wow, UJ just completed almost about to complete the New York model right now. AU's ramping up. Let's take a look at it side by side. If I could do this quickly for you guys. AU, let's do something that's inversely correlated. I want to take all AUD, USD. I want to take all the drawings from this side on a 15-minute chart. Take all the drawings on this, copy it, come over here, paste it on this chart. Nice. Thank you, TradingView. Love TradingView. Sometimes. Jeez, look at UJ. Gone. Now we took out sell side. It's already moving. So that means what? AU should probably start to push up. Unless they're stalling and they're gonna boot this market down. But UJ looks like it's gonna want to run down here. We got 1 minute. Hey, let's go. I'm hyped. I'm hyped. I'm hyped. Do not trade this. Please be careful. If you are gonna trade and you're gonna be hard-headed, micro lots, man. All right, moment of truth. Look at that. UCAD just triggered the UCAD just triggered the entry. Shout out to UCAD. What? Let's go. Let's see. Let's see. How does this go? Look at that. TP hit. Get out of here, guys. I didn't do all the yelling and all the other stuff today, but look at that. TP hit. Isn't that crazy? We did this live, NFP. And they're going to tell me, oh, this is fake. It's hindsight. Deontay's lying. He can't trade for real. I don't really care. Because at the end of the day, I get my bills paid. Mom and dad are happy. My little brother's happy. Shorty's happy. That's all that's all that really matters. I'm happy. That's all that really that matters. Like, come on, guys. It don't get no better than that. You telling me I just broke it down for you guys? 1 minute entry. 1 minute entry. Get out of here. Let's go to UJ. Look at that. To the pit. To the pit, dog. To the pit. We got to clap it up for myself. We got to clap it up. All right, guys. It's been a pleasure. You know what I mean? Like, I don't know what else more people can want from me, but like, hey, I try my best. I'm not saying I'm the best trader in the world. Look, gold bullish. I knew gold was going to flip around and turn around. And that's it. Like, once it's done, it's done. It's done. The trade idea is done. Don't get in trying to chase price action. Is done. Like, that's it. Hopefully you guys found this insightful. I will see you guys next week. Enjoy your weekend. Peace.